Hi, everyone. Richard and Angela from Del Monte Group here with a breaking news update. It's Thursday, August 3rd, and yesterday, Fitch, a credit agency, downgraded the U.S. credit rating. And this led to the stock markets declining about 1% and bond yields going up. It also scared some people. So we thought we'd come to you with some info about what's going on.
For sure. So what does it mean when the credit rating gets downgraded? So there are three basic rating agencies that rate companies and municipals and government agencies and things like that. And they rate the federal government's credit rating. And historically, we've always been AAA, the safest investments in the world. But now in 2011, one agency, Moody's, downgraded the U.S. to AA+. And then just yesterday, Fitch, another ratings agency, downgraded us to AA+. So we have two AA+ and a AAA now rating. Yeah. And so, that's really what happened.
What they're saying is, they're ever so slightly more concerned about the United States' ability to pay back all of its debt. It's kind of like a credit score for you and me. How good do you look on paper? Right. We look slightly less good today.
Right. And, we have been increasing the debt. We all know that level, by trillions of dollars a year in recent years, especially. And I think the last time I checked, we're 34 trillion or something that we are in debt. And, there's really no end to that in sight. And it's starting to frighten some of these folks. Mm-hmm. I think that's easy. You can get easily frightened about it. But I think what really we need to understand is, how dangerous is this? Yeah. Long term, we have to fix this. We can't continue to go into debt ad infinitum, but we're really still okay in terms of, because, how much we can support.
Yeah, because, if you think like, 30 years ago, the national debt was only 5 trillion. I don't know if that's the right number or not, but wow, that seems really high, but you have to put it in perspective. The issue is our ability to make the payments on all of this debt. And that comes out of our current GDP, essentially, like what we all as a society produce, right? And so what's interesting now is that the servicing on our national debt today is about 1.9% of our total GDP. In the 90s, it was over 3% of our GDP. So technically, we're in a better spot in terms of our ability to pay our debt than we were in the 90s. People kind of forget about that because 32 trillion is a big old number.
Yeah. It's still, so basically we're still in the place where we can afford it, but we don't want, and if interest rates continue to go higher, that could change. But, let's face it, we need to address, the biggest things are entitlement programs, Social Security, Medicare, things like that we basically need to figure out a way to make those things be able to be afforded by us. And we know they're going to be exploding because of people like me who are entering, getting into retirement age and Medicare
sucking
age.
Us dry.
Yeah, that's right. But that needs to be addressed, and we should be working on it. Unfortunately, the government, the Congress and the federal government at large doesn't address these things until the wolf is at the door. Yeah. That's just how this country rolls.
Yeah.
So we're probably not going to do anything until we get to, a bad spot. But that's years ahead.
We're not. Yeah, exactly. Right. The markets responded yesterday. I dare you to find a news story about it today.
You couldn't. Yeah, I've been looking. I couldn't find anything.
No one's really talking about it. So no, this is not something that you need to be losing sleep over right now. But one thing that you can do is write to your representatives and say, hey, this is important. And we want you to start making the hard choices and changing this for future generations.
Right.
Exactly. But as of today, everything is okay. On this debt downgrade, you can continue. No need to change your plans.
No need to get out of the stock market or anything like that, or change anything you're doing.
We hope this has been helpful to you. If you do have a question, please feel free to give us a call.
Yep. Thank you.